Hello, welcome to the European Open briefing for Monday, May the 8th. I'm Rafi Bergian, currency analyst at xm.com, and we're going to be having a look at what's happening in the currency markets today. So the French presidential election is, of course, dominating the financial markets this morning. The centrist candidate Emmanuel Macron was the winner of yesterday's second round of voting. He got almost 2/3 of the vote, giving him a far bigger margin over the far-right leader Marine Le Pen than expected, and this boosted financial markets. We saw the euro rising to 6-month highs against the dollar. The safe havens were overall weaker this morning, although they've since recovered a little bit, and this also boosted the dollar against the yen, which is trading close to the 113 yen level. The Australian dollar isn't faring so well. It's stuck near the 4-month lows touched last week, following slightly softer than expected data out of China and some mixed figures out of Australia. But oil has managed to recover from that big dip we saw on Thursday and Friday after Saudi Arabia's energy minister said that that output cut, the extension of the output cut, is looking likely. So moving on to the euro now, we can see the euro briefly touched 1.1020 against the dollar. It's fallen back a little bit since to around 1.0985, and this comes after the Emmanuel Macron, as expected. He was voted as the next president of France with a much bigger margin over Marine Le Pen. Most polls put him at 60-40 against Le Pen. He got almost 2/3 of the vote, so it was slightly disappointing result for Marine Le Pen, but it was good for financial markets as it could signal the end of the populist backlash across Europe. And then this, of course, follows the Dutch elections earlier this year, and we also had regional elections in Germany where Angela Merkel's party they won the regional election, and this is also a positive signal for the September general election we have in Germany as well. And all of this is likely to give the euro underlying support of the coming months, although Emmanuel Macron does face a big test in June where there's legislative elections to hold new members of parliament. Of course, Macron's En Marche party is a fairly new party. It doesn't actually have any members in parliament, and although he has said that he will be putting candidates across in all the seats across the country, we've yet to see how the party will fare against the other more established parties in France, and whether or not he will gain enough seats to make sure that he's able to pass major reforms which France needs very badly. And positive optimism spread to the dollar as well. It briefly popped above the 113 level against the yen. It's currently trading around 112.70. We did have, of course, those non-farm payrolls numbers on Friday, where we got a much bigger than expected 211,000 rise in non-farm payrolls in April, and the unemployment rate fell to 4.4%. And all of this signals to the strong economy, even though this first quarter growth was slightly well, not slightly, it was actually the lowest in some time. But it does suggest that this was temporary, and as the Fed said in its FOMC statement last week, growth should resume its moderate trend that we've been seeing over the past couple of years or so. Although wage growth was it did actually ease to 2.5% year on year, and that suggests that even though the employment market, labor market is tightening, wage growth has yet to rise substantially, meaning that the Fed only needs to raise rates very gradually. We had quite a bit of data out of China and Australia this morning, and it hasn't done the Australian dollar any favors. The Aussie is trading near 4-month lows at around 0.74. It hit a low of 0.7365 on Friday as weak commodity prices continue to weigh on commodity-linked currencies. trade data out of China, it was disappointing, although overall it points to stronger growth in 2017. Exports rose by 8% year on year in April. Expectations were for 10.4%. Imports were also below estimates, rising by 11.9%. Expectations were 18%, but nevertheless, it wasn't too bad. It still points to exports growth in China following a very bad 2016 for Chinese exporters. Australian data was mixed. We saw building approvals plunge by 13.4% in March. Expectations were for a much smaller drop of 4%. But the NAB Business Confidence Index rose to the highest since 2008. There's mixed outlook there for the Australian economy, although overall the Australian economy isn't doing too badly, perhaps not as strong as some analysts had been forecasting, but the Aussie for the time being is mostly being impacted by the dropping commodity prices, particularly iron ore. If you look at oil now, we can see oil, it touched a near 6 months low of $43.76. That's US crude last week. It's since rebounded. Came close to touching $47 a barrel before dropping back to around 46.28 at the moment. Of course, that drop came because of growing concerns about oversupply and that the output cut that we've had from OPEC and some non-OPEC countries isn't enough to offset the rising output from countries such as the US. But we had some comments from the Saudi energy minister this morning. He said he was confident that the current agreement will be extended into the second half of the year. So that helped lift prices higher. It also boosted the Canadian dollar, which last week we saw USD CAD rise to a near 15-month high of 1.38. We also had disappointing jobs data out of Australia. Although the unemployment rate fell, employment rose much less than expected. So that was negative for the loonie. Although this morning the oil prices have helped USD CAD drop to 1.3665. And finally, today's economic calendar, it's not looking too busy in terms of major data. Coming up later, we've got the Eurozone Centix Index and housing starts out of Canada. But apart from that, it's looking very quiet. That's it from me. Thank you very much for watching and have a great day.